Yes, guys, I'm back. I'm back with another one. Who'd have ever thought you'd have seen me on a Saturday? But it is bank holiday weekend. I'm just doing a quick one. I'm going to have a little look at BTC levels, see what's going on there. We're going to have a little look at a video from somebody that just basically explaining how institutions trade and how the retail trade. We'll also have a little look at BTC levels, see what we're doing, see where we're at. I'm going to go through something as well about crypto in general, just to put my point of view out there to see if most of the people actually agree with my point of view. We'll look at BTC DOM, USDT DOM, and discuss to see if they actually do matter anymore. So yeah, let's get straight into it, guys. So I'm on BTC. I was just having a little look at BTC. So we've got on the daily some pretty important levels. We've got all these highs here that are clustered together. I don't know why I did that, I've got it there. So we've got all these highs around here clustered together in BTC. We've also got all these highs here clustered together. The lows that were clustered together looks like, they got taken out. We came back up above, fell below, and then come back again to have a little look. So these are the areas that I can see at the minute where we could potentially be going. We've also got a few levels down here, which will be liquidity zones. But here, major levels. We've also got these up here around this zone at about 99k, where there is gonna be a lot of people that have placed the stops in these zones before we came back down. So, just what I want you to know, I'm not going to give too much away because this is my main strategy that I use. I know I've shown you a lot of strategies over my channel, but this is the one strategy I use on most of my coins. I'm not really going to delve deep into it, but these equal lows, like them there, all got taken out. All these here, all got taken out. These here are still resting. And I mean like all these here. That one, that one, that one, that one, that one, that one, that one. All them levels are not taken out yet. So with the 90-day pause, it is possible that we do come up. We might even sweep again here. And then come up. If we start to hold these levels here, just like holding that level there, there's a big chance that it comes and sweeps all that liquidity out up there. So I've got my eye on a few levels of interest. I can drop to go one more time frame to the weekly and actually look at some more levels. So we've got all these equals here around this zone. We've not tagged it yet. I still personally think we do tag it. We've also got some lows down here as well. Another zone up in here, we've not tagged that either. And that's around 91k. But looking on the weekly, even the highs here, these are levels of interest that I'm going to keep my eye on in BTC. I'll probably put boxes around them, just have a little look how they're reacting. But for now, these are my levels that I am watching in BTC. So, if you want to mark them down, keep them on your chart. So, let's have a little look at this video that I found, and we'll go through it as we're actually watching it. So this is the video.
It's always
Right,
looked upon as negative, certainly at the retail trader level. Institutional traders are taught from their first day that they buy good levels or they don't buy at all. Unfortunately, most retail traders will wait for some confirmation.
Did you hear what he said there? Institutional traders will buy at good levels. So if we go back to BTC here on the daily, I'm just going to have to... So I like to look on the weekly. This level here, I can almost guarantee you that institutions will be looking at around between 73 and 72. So let's say between 74 and around 70. They're going to be looking at that level to see, is that possibly a good buy for me in BTC? They're also potentially going to be looking at around these levels here. Is that going to be a good sell? So let's go back to the video.
Before they get in. That could be a candle pattern, could be a moving average cross, or whatever.
So what he's saying is about retail, they're waiting for confirmations, they're looking for candle patterns, a moving average cross, things like that.
Institutional traders will buy at the level. Now, most traders will put their stop loss a tick under the last low.
So listen to that there, what he just said. Institutions are buying at a level, okay? So say that level there. Retail, what they will do, they may buy at that level, but instead of thinking outside the box and thinking, this potentially could come back down, most retail will probably put the stop losses here and go possibly something like this, a 1 to 3 at that level. That's what he's saying. Institutions don't do that. They'll hedge
low, and they will invariably put their stop loss at exactly where the institutional orders are. I think that institutional traders are just doing what institutional traders do, putting their entry points at very good levels. However, if you are trading at the institutional level, it's not always easy to get filled. At the retail level, if you want to buy 100 shares, you want to buy the pound against the dollar at a 5 or a point, you press the little button and you've got it. At the institutional level, it's not that simple, and you've got, on occasions, to actually generate...
Right, listen up to this bit.
...the liquidity to get aboard. I don't think that anybody looks at where the stops are, but they will say to themselves, well, we know pretty sure that most of the stops will all be crowded around this obvious level. So they will bid the market at that particular level. All you need is one person to chicken out, and the markets are going to go where the bids are, and all those people will be taken out. So I think that if you do not think long and hard about where you're going to put your stops, that you're going to find that you can quite easily die in a sea of stop losses. Okay, earlier on we talked about one of my things that I think about all the time, and here's an exercise for some people. The next time you're just about to put a trade on, you pick up something heavy and you just go poof. And then you write down on a piece of paper where you were going to buy and where you're going to put your stop loss. Don't buy it, but put an order in to buy it at where you're going to put your stop loss, and then just watch how many times the market goes to your order. Okay, markets will go to the obvious stops most of the time, and one of my rules is that I want to put my entries where the masses put their stops. So I think that you can think your way through most of that but you really need to spend some time in being brave and getting in at a good level. If you don't get in at a good level, there's nothing that upsets me more than a guy saying that this is a very risky trade, I'll use a tight stop loss. That's just rubbish, because you'll get stopped out over and over and over again. The stop needs to be where the stop needs to be. So if your entry is sloppy, then your stop loss is going to have to be a red bus away from where you got in at, to give yourself a chance of staying in the move. The average true range will help with that. Most traders will look at a stop loss of 2.5 times.
You can hear what he's saying here. He's basically telling you, if you're putting your stop loss here, or if you bought, I don't know, let's just remove that 1 second, yeah? So say we've got on the daily, let me move the weekly levels right quickly. So say on the daily, we're having a little look at BTC here. You've seen BTC come up into this zone, okay? Say this bit of price action here, right? You've seen that and you think, yeah, that's a bullish candle confirmation. Let's go with that. Or even here, a bullish candle confirmation, okay? So that's closed there. We've gone long. We've put our stop loss there. On that trade there. Where are we aiming? Because most people haven't got an aim in mind where they want to. Me, personally, looking at something like that there. So zoom into this now. Institutions know that you're going to want to buy in here. Even if you'd have bought there. Just stay there. Your stop is going to have to be here. So you do not get stopped out. But eventually you did get stopped out. So what he's trying to say to people is, stop putting your stop loss in a place where it could potentially be wiped out. So you're going to have something similar here. Seeing the candle confirmation. Even if they bought there. Say they bought there. Your stop's under that low. Where are you aiming for? Potentially this high-end liquidity up above. Look at the state of the trade. It's a 1R. So you could lose 1,000 to gain, what, 1,010? It makes no sense whatsoever, guys. Start looking at your charts a little bit differently. Otherwise, you're just going to consistently get stopped out. Right. Let's move on to the next thing. We'll have a little look at BTC dominance. And I want to go over some of BTC dominance. So we're in a level that I've had marked out for a while now. If I go across again, I've got another level up here. It's going to be pretty bad for alts if it holds this level. Because to me, that's the next zone of interest. In my personal opinion. You've got all your sausages on Twitter, all your beef burgers on there, and all these absolute stupid people. So that is a major trend line, okay? Let's get rid of that a minute. That is a major trend line that he's in at the minute. We also had another trend line in there, okay? That's what I wrote in the group. If we get a trend line from this high and move it down, let's have a little look. I'm not going to spend much time on this because I want to get over something else. If we move that down and we mark that zone out, you would have seen that you didn't want to go long in alts yet. Don't get me wrong, that little move there, yeah, alts had a nice little rally. You know, it dropped around 12%. Alts went up about, I don't know, about 60, 70, 80% maybe. But if you're looking at that trend there, that is not telling you to go long in alts. Is it? For some reason, I'm looking on Twitter. I don't even know where they're getting these patterns from. That they're doing stuff like this. We're in a symmetrical triangle pattern. Are we? Oh, okay. If you want to do geometry, yeah, I'm not saying trend lines don't work or all like that, but you know what? I've got to the stage when I'm seeing stuff like this, and they've got triangles all over the pattern. You might as well put circles in. You might as well just be like, this is a descending circle pattern. And if this breaks into this circle pattern, we're going down to here. Honestly, if it makes you feel good, carry on doing it. But to me, it's overanalyzing silly stuff. Silly stuff. Yes, like I said, trend lines can work. They can. But I know for a fact that they would have had a pattern. Let me go on to here a minute. Close that. Let me find that. Where are you, bugger? Close that a minute. Right. I know for a fact most of these Twitter sausages would have had this. I'm telling you now, this is what they would have had. And they would have called that an ascending triangle pattern, or whatever it is. Yeah? That's what they would have called that. I can guarantee you it right now. It's like they're just, they'll have done something like this as well. It's an ascending triangle pattern, which is bullish. So if it breaks up above, it's going to go. I'm sorry, but I can't get my head around it. How they're actually thinking that that's going to work. If you'd have just had that one trend line in from November 16 to where we are now, not to long alts. And yeah, I understand it's hit it there and then it's fell, and it's hit it there and it didn't fall. But there's no reason to long them there. And also another thing, I've been thinking about it. Does dominance actually matter anymore? Does it really matter? Because now the big players are involved, are they really looking at dominance? Just put that in your mind. Are the big players looking at BTC dominance when they're trading? I don't know. I probably doubt it, but, whatever makes you feel happy. Same with USDT dominance. They'll call that there an ascending triangle pattern. To me, that trend line's not, it doesn't really work, does it? How does that, where can you connect that? Really, what there? So if they were looking at any other charts, these sausages that pretend that they know what they're doing, they're going to say, if that breaks out up above, and a successful retest, it's going to go off. But all of a sudden, they're all saying the opposite. They're all saying the complete opposite to it. They're saying, if this comes down a little bit further and breaks below, it absolutely baffles my head. And this is why I can't stand listening to them on Twitter. I really can't. And does this really matter anymore? I don't know. All this is showing you is that money's either flowing back into USDT or flowing into Bitcoin. And really, can it help? Possibly. But I did say down here, that there looks bullish to me. And if that were a coin, I would be longing it. And if it had been a coin, and I did long it, I got a 50% move out of it. Just saying. So we'll forget about that. Let's go back to BTC, US dollar. I have shown you this in my last video. You want to get plenty of data on your charts. This is the one to look at. Plenty of data. You know, it goes all the way back to October 09. When were Bitcoin released? Or 2008, I think, or released. So, you know, you want to look at something, have a little look at that. So, let's get on to something else that I really wanted to talk about. And it's just about crypto in general. So, crypto in general, this is what I want to talk about. So, you know, when crypto first brought in, well, Bitcoin were brought in, it was decentralized money that the people, that's why Satoshi and Nakamoto wanted to create this. So the people had control over their own money, yeah? That's what it was. It was supposed to be a fuck you to the governments, to the big banks, to say, we have control over our money. We will use this as decentralized cash. So you lot can't continue to get your grubby little fingers on our money. Yeah, that's what it was made for. So why is it 15 years later, people now are cheering the governments and big banks on, saying, yay, the government's involved in it, the big banks are involved in it. Wasn't it meant to be a fuck you to them? Wasn't that's what it was meant to be. And now, the people who are, most people know what they are now cheering the people on that actually are rinsing us, the public, every single day of the week. And now you're all out there, you're all cheering along, you've got your banners out, and it absolutely baffles my mind how we've done that, how we had control over something like this. Yeah, we made that move. We did that. We made that move. We sold, and that move there. And this move here, I think it were all the way up until, I can't remember when it were up until, but it were around this zone here anyway, yeah. We started that move. And then we started to cheer them on. Yay, big banks are involved, blah, blah, blah. My head goes west with it all. And it's just, people's mentality is broken. So, I'm telling you now, give it 10 years or so, everybody's going to be sat there with the you know, the head in the hands, and they're going to be like, why did we want this? Why did we want the governments to take control and the big banks of something that was ours? And now it's just another thing that we've lost. We gave it away, and now we sat holding the bag of dicks. Excuse me. So, have a little think about that. You know, before the next time that you're watching the government's buying something that was ours and is no longer ours. And if they want to destroy it, they'll destroy it. Believe me now. If they want to dump this coin back down to here, they'll dump that coin. And there's nothing you or me can do about it, unfortunately. You know, have a little think about that next time that you're trading. And think, wow, you know, Jeff had a point here. And I did say it. I said it here. I said it around here. Them getting involved is a bad, bad idea. A real bad idea. And they've got involved. And now the one thing that we had, we no longer have. So have a little think about that. And that's it from me today. I'm going to get off now because I've got a lot to do. But don't forget to like, comment, subscribe. We've got links to CWP, free chat and premium in the description below. We've got links for James's Baccarat Indicators, Slim's Bots. I've got a link for Buy Me a Coffee. And I've also got a link for Bluffing if you want to join me on there. Excuse me. The link will be below with everything else. And yeah, I hope you all have a great bank holiday weekend, Easter weekend. And I will catch you next week, guys. I'll be doing another one probably Wednesday, Thursday time, possibly. So yeah, I will catch you in the next one, and happy trading, guys.